Hi traders. Thought I'd do a quick video on my last gold trade. The reason being because I actually lost on the first attempt, and it was due to a few silly mistakes. Basically, I rushed in, didn't allow the candle on the 1 hour to at least finish, do the move to the upside, and so yeah, got stopped out because I moved my stop loss too hastily. So my original entry was at around what was scaled in, so between sort of 40 and 42 up here. Looking for price to come up to this 764 area, 764 strategy. You notice that yesterday we had to wait patiently. I was looking for it to get up there, didn't get up there. Actually hit the 618 and bounced off straight away, and actually retraced 61.8. If you look at it on a 15-minute chart, for example, it would have been yeah, really nice little patient trade, and then I rushed it, which is quite funny. So, I guess you can all relate to the simple, silly little mistakes that we can still make. So I thought I'd do a video because these are the variables that you will have to often deal with and contend with. So there you can see it went up there and then it dropped. Bit frustrating, I guess. Tapped it. Third attempt, fell. 618 retracement, and then back up. So I didn't take the trade because I was adamant about waiting for it. Had to wait for it today. So here it came back, did the whole consolidation, did the whole 382 retrace, consolidate, and then it had another go to the upside. Initially it stalled, and I thought, oh, come on, just make up your mind. And then it broke, which was great. And so it came up to here, and I started looking and observing to see if we could get a trade on. Now, looking at it on the 5 minute, what happened was I had my stop initially at 1946, which would have been great. And the reason I had it at 1946 was quite simply because I was looking at these fib extensions on this last swing that we had yesterday, being Monday the 4th of April 2022. Regardless of the date, it's a good learning experience. So stick with me for a sec. I'll make it brief. So yeah, waited. Patience pays. Always know that. Stick to your guns. Commitment is important. I wanted to sell it here. I don't want to sell it here. I don't want to do it there. I'm not interested. I'm waiting. Comes up here, great. Start looking to get involved. So I started scaling in. I thought, okay, got some extension levels here. It has no business really going up here unless it's thinking about maybe going up to retest a high. But because it's made such a strong move, it might just start pissing around up here a little bit, start messing about. And to be fair, it's gold. So gold, as in other volatile pairs, can move quite crazy. So for it to go up a little bit, I need to account for that. Bit difficult, but sure. Ideal scenario is it gets up here, taps the 764, and on any given day, most of the time, it will tap it and then drop, and that's great. Today it didn't want to do that. It wanted to just shoot past it a little bit, mess about. So I was looking at my charts on another screen, and I had a 15-minute up and then a 1 hour up. And because I was busy doing lots of things, and I was scaling in with lots and lots of positions up here, because I was thinking this is going to put in a lovely drop, because it's like an elastic band. It's stretched so nicely up here. I'm thinking this is just going to go down like this, which it did. So I'm thinking, great, getting excited, putting on loads of positions, scaling in. And then I end up looking at my 15-minute chart, and I thought, oh, it's done, or it's going to be done. And I was calling this trade as well out into the channel, into the group, my Telegram group, my Telegram channel, giving this trade call saying, and I had been since yesterday. So those that follow me and trade with me, they were fully aware, and they got involved as well, waiting up here patiently to short it. But yeah, I made the mistake of thinking that it was done, and then I thought, oh, it's not done. It still has another 15 minutes or so, or 20 minutes to go to the close of the hour, and this is about 2:30. So this is 2:30, 2:45. This is the London fast approaching London US, the US Open. That opens at 2:30 London time, which is 9:30 New York time. So I'm looking at it, thinking, yeah, we're getting ready. We're going to short this soon. Let's put stop up here just out of the way. Let's start scaling in at this level, and if it drops, then we can just tuck our stop in. But foolishly, I'm looking at my 15-minute chart and 5-minute chart, mostly the 15-minute chart, instead of focusing on this 1 hour chart and allowing it to just finish. Because sometimes it will do this, won't it? It'll go up, just ping itself up a little bit on this 1 hour, and it looks like it's about to continue, and then it fails, and I didn't account for that, and I rushed in, see. So I should have waited another sort of 10-15 minutes, allow it to retest the high, and My stops were at 46, and it got up to about less than 45. So even if I had my stop brought it down slightly to 45 instead of 46, would have been okay. But no, instead, stupidly, I brought it down to 44 because this was the last high. This was where the current price had been sitting at around 46.6 or so. So I just put my stop here, and stupidly it did that whole liquidity grab, pinged up and then dropped. So got stopped out on the first attempt, lost 0.5%. Okay, fine. I put a poll out there, sent a survey to see what my traders had been doing. Some got in again when they got stopped out, and others didn't get stopped out because they didn't move their stop. They just waited, which was great. So it was kind of like, okay, the mentor becomes the mentee, and it was nice to see. Really happy. So I thought I'd just share this with you because sometimes it's not textbook, and sometimes it isn't as clear cut as you would like it to be, and sometimes it just wants to piss around a little bit first before then putting in a move. But because I believe in my trade, my strategy, my conviction, I trust the process completely, I got in again. I got in again on this bit of a drop down. I said, you know what, it looks like now it's going to top out, it's going to go. Looking at it on a 5 minute, 15 minute, 1 hour, I'm thinking, yeah, good, this is dropping like this, get some reversal. Got in again, 42, 43, 41, 40, 39. I was in all on this area, and it just went bosh. And I just started taking some profit off down here at my T1, then start trailing the stop loss. And what you do here with trailing the stop loss, it pinged down, it went beautifully down to about 27, 28. I took some more off at 29 because I saw that 50% of this move was around 30, 29, 30. So I thought if it gets down here, I want to bank some. Ideally, I want to bank the bulk of it at 33. It got down to about 35, and I shaved a ton off anyway down here. So all of this, I was just taking a little bits of profit off. And then it pinged up, so immediately apply my 3 option rule, looking at the price action to potentially breathe in because it's extended quite nicely. So it might go up and put in some sort of retracement. And I measured that, and I said, right, the 382 of this is around about here at 33, funny enough. So I'm going to put my stop at 34 because that's 33.82. I think, okay, that's fine. So I trailed my stop loss to 34. Never got up there, didn't quite touch it, got up to about 33 and then dropped and went straight to target. And so really delighted with this trade. In terms of a risk to reward, as it should have been, the original trade short, which I called in the group, was entry around 40. Said that I'm scaling in between 40 and 42. Stop loss is at 46. So, 40 to 60 pip stop because you've got to account for this noise. And then the risk to reward, well, as you can see, the risk to reward was about well over 2.5, just on that part of the move. I mean, the whole move, you're talking about, pretty decent, really, down to 23. So 23 from there, it's about 40, best part of a 200 pip move. And if you're putting in a 40 to 60 pip stop loss, you can do the math, maybe a 1 to 5, 1 to 6. It was decent anyway. So that in effect was the trade, was the move, was the setup, and just wanted to let you know because I did mess up a little bit because I rushed in effect. We're talking about 10-15 minutes, but this is where I'm looking to get in, and I rushed to move the stop. If I had just left it alone, I would never have been stopped out, and I would have not lost 0.5% in the first instance. But we made that back, and then plenty more on top. And just to show you that on a 1 hour chart as well, on my chart, so you can see trading at the moment range bound on gold. But if we do that, scrunch it up, this move has been developing nicely when it pumped up, and looking at that 764 area. The trend line resistance all on the 1 hour, just thinking if it can come up here and find some resistance and drop, then it'll be a decent pullback. Obviously it exceeded expectations. Obviously though, it needed to just peak, pump up. You can see here liquidity, just take everything out, even me included, and then it dropped. So but because I believe in the trade and the setup, and like I say, I've got a strategy that's proven, it's high probability, I wasn't phased. I just got in again and made my money back and then some. So, managed the risk and didn't go on tilt, didn't mess up, didn't wobble, didn't, overthink it, just got back on it. Hope this finds you well. If you like what I do, come and get involved. It's always free. I've got subscribe to what I'm doing. Telegram channels are there. They're always free as well. I'm always sharing my content. Probably do that for another few months before I look to just take a step back, retire, go on holiday, move to another country. I don't know. We'll see what happens come the summer. Thanks very much.